Hello, and welcome to the Invest with Carl podcast. I'm Jamie Uppenberg and a member of the Carl team. We're chatting with Maleeha Bengali of MB Commodities Capital, LLC today. We'll ask the usual first questions about the fund, what makes it so successful, some fund history, and what's important for investors like you to know. We are Carl, digitally offering unique hedge fund investment opportunities with packaged and data-driven delivery to accredited investors. MB Commodities Capital is an upcoming investment opportunity available at Carl. So today we have Maleeha. She has, for over 25 years, Maleeha has worked as a portfolio manager and or trader for various hedge funds and proprietary trading desks across both the US and Europe, and in both equities and commodities. She's done it all. And that has been including UBS, Goldman, Merrill Lynch, and Noble Group, just to name a few. So she's been around. Hi, Maleeha. It's great chatting with you today.
Hi, Jamie. Thank you for having me here.
So to kick us off, just start by telling us what it has made MB Commodities Capital strategy successful so far, and why would you keep it in your portfolio if you weren't managing it?
That's a really good question. So I think the reason why MBCC stands out is that commodities is an asset class that a lot of people have been looking at for the last 10 or 15 years. And they've been trying to play ways to invest in commodities, but it's the only asset class we feel that is not well understood. It's quite opaque. It's not as transparent as equities or bonds. There's a lot of lacking information, physical market displacement, and mostly retail investors, people like ourselves who want to invest their money, they don't know how to play the commodities. And they use these retail ETFs, which tend to be quite value destructive for the portfolio because they have these inefficiencies due to the complexities of commodities. So we feel having a hedge fund that gives investor exposure to equities and commodities, along with the macro multi-strategy asset class, gives them a good way to diversify their returns. Because sometimes, equities are in vogue and sometimes commodities are in vogue, but you really need a multi-strategy fund to be able to play those dynamic shifts between asset allocation. And we feel that's what MBCC does.
Great. And so it sounds like MB Commodities Capital, if you really care about diversification and are trying to help the investors diversify into markets that generally are hard to do on their own. Taking advantage of all or any market, meaning up or down, I think as well, right?
Yes.
So was that the plan from the beginning, or has the strategy changed? How has it grown since you started it?
No, you're absolutely right. It's always been a long and short strategy. What happens in the last, we've seen due to global quantitative easing, markets have been in an uptrend. So most people have been long the S&P or NASDAQ and have had very good returns. We've always been sort of long and short. So we sort of underperform on the way up, but we outperform the way down. As in, we'll always make 10%. We may not make 50, 60%, but we may not lose 20, 30% because most hedge funds are pretty much levered to the market. And from my experience being in hedge funds, most funds are just naked long the market. So our strategy has always been true to its course, i.e. we see displacements in valuations on the upside and downside, and we play those games by being short or lowering the commodities to really get the alpha generation. So that tends to make our returns a lot more stable, consistent, and we don't sort of chase massive momentum trades on the upside or downside. And that's always been a strategy for the last 20 years, or it's been my strategy for the last 20 plus years.
Great. So there's obviously a lot of focus on your diversification is great. There's a lot of focus on your fund when we talk about the funds and what's been going on with it. 20 years is a long, has the fund been running 20 years, or is that you're just the breadth of your experience?
That's the bulk of my portfolio, but the fund's been up and running for now 5 full years, audited as an independent portfolio manager outside of the big banks.
So this is kind of a step into using technology to make it available to more people. And we know the classics, right? Robinhood, Yield Street, Fundrise, Yield Street. And Carl as well is up there with them, really digitally offering the fund so that people can see more of the data and how the fund is performing, how it has performed. It's right at their fingertips and they can work with that data however they would like. And most of it is real time if possible, or closer to real time. It's not on this quarterly basis like hedge funds used to be, or maybe even further apart. Yeah. How do you think that changes the landscape for an investment like yours and other hedge funds out there?
For me, it's not an issue at all because I trade mostly in large cap, liquid, transparent instruments. So we have real time market data. So in terms of an investor, when you're investing in a fund, you really have live value for the fund. Obviously, close is important, but we don't trade illiquid OTC options or derivatives where you have a mark-to-market issue. So there's a lot of transparency. In fact, liquidity and transparency has been a paramount a function of our fund, which is very important to our investors. Most hedge funds, given if it's credit or distressed or private equity, these have had great returns in the past, but then there's very illiquid and they have gates. What that means is like we don't give gates to our customers. If my clients want to take their money out, we can liquidate the portfolio in less than 5 minutes because it's all liquid stuff. Because these are thematic trends we play. We don't need to take so much risk to really play what our strategy has an edge in. So we don't need to trade in something that's locked in for 1 year. We tell our clients that, you should be here to make money between 1 and 3 months because our investment horizon is usually between 1 and 3 months. We play the earnings quarterly cycle and we play sort of economic cycle displacements to really sort of, monetize on that.
Obviously, I think that's interesting to a lot of Carl investors. And it is different for just more regular accredited investors to have access like this with lower investment amounts to start and all of that. So great that the data is available and they can do their own research. I'm going to shift a little bit. You're our first fund that is managed by a woman. And honestly, I don't know, what have I been doing this with Gunnar, like 3 years or something? Yeah, I think so. I have not had a female fund manager. Gunnar and I have never even talked about it. So how do you think your challenges, how did you get into this and why did you stay with it? And how do you think your challenges are different than your male peers?
That's a really good question. So oddly enough, I actually have a company that I launched in Dubai. It's called Awam, a woman's alternative asset management platform. Because when I sort of was in the banking world and, we went through very sort of changes and losing our jobs and restructuring, a lot of my female friends came to me who are between 30 and 50 and said, Maleeha, what do I do with my money? And I used to always advise them. And then I realized, my God, women just work so hard to make money, but they don't invest for the future. The financial jargon, the idiosyncrasies, they're so scared to ask the questions. And generally, less than 30% of women invest for the future, whereas the opposite for the men. Coming from Pakistan, like I lived in a country where financial emancipation is quite rare for women, and it's something that's very close to my heart. So from a very sort of young age, I've always sort of driven towards empowering women, encouraging, whether it's sports, whether it's work, it's a passion of mine. So when I left the corporate world, I wanted to combine my two passions, running money, investment management, but also helping women, which is why I launched the fund in Dubai, because I do think there's a demographic shift. I think there's so many women out there, especially the Middle East and that part of the world is just opening up. So yeah, I think it's you see these amazing female-run companies and ventures. It's great to be part of that strategy, but when it comes to running money, I don't think about being a man or woman. It's about getting the job done. It's about making money. It's about returns. But I do feel, because all my years of working in all these different shops with 2,500 traders, the way women think about risk, the way men think about risk is very different. So that's why, because we are nurturers. We want to make little money every year consistently, whereas most of the men that I work with made like 100%, but they blew up 200%, and they got paid a lot of money. But we're a lot more consistent because it's in our DNA. We want to make money we're very accountable for what we do. And I think that risk management philosophy goes into my portfolio. That's why I'm not too levered. I want to make stable returns because my clients are, whether they're pension funds or like single mothers, capital preservation and wealth optimization is very important to me because my money's in this fund. So it resonates with me. Right. And that's how, it sort of speaks to my motto.
Yeah. I mean, we've talked about this a lot with the hedge funds that, you can find a fund that's really reaching for this massive boom of a gain, but a lot of hedge fund investors are really just looking to maintain capital in tough times and have reasonable growth, right? Market level growth in good times. And that'll kind of get the job done. We can risk a little, but those high risk hedge funds, the stereotypical hedge funds, I don't think are what most people are looking for, at least not from my conversations.
But it's changed a lot. Back in 2020 or maybe 2008 or 9, a lot of hedge funds are like, you're too conservative, but I've always been more conservative. Now, in the last 2 or 3 years, when markets are shifting from passive to active, they're like, hey, that's actually pretty good returns, right? So it always changes when Bitcoin is in vogue and things are 1,000%. No one cares about our fund. But you're absolutely right. I think that philosophy is changing because it's a lot harder to make money now. And hopefully these, buy the dip, mentality, robo platforms, AI platforms, they won't be able to do, because I think markets are changing. We're in an economic cycle where the next 10 years will be very different from the last 10. And that's where you really need to have active, multi-strategy management.
Yeah. Yeah. So performance, and then we also talk about risk controls just a little bit in this first conversation. It sounds like the fund itself is set up for the risk controls, meaning it's ready to gauge a down market and make adjustments and shift to the short. This is not a quantitative hedge fund. So this is our first shift into a more standard hedge fund. How does the fund, assess these situations? How do you assess the situations and make the adjustments to the portfolio in changing volatile markets?
So we use a host of strategies, and given my experience in a ton of strategies, so the way this fund works is we have a quantitative model where we basically look at 25 different factors. Now, these are just tools for us to see where market is displaced. So we look across equities, credit, bonds, FX, tons of factors. I mean, it sort of gives us signals as to like what is cheap, what's happening, what's sort of broken, away from its relationship. But we don't trade just on technicals. That is combined with our analysis on the bottoms-up valuation of the company fundamentals. If I think that, let's say, oil is very cheap compared to other commodities, we're like, right, let's see how it is in the macro basket. How does it actually fit into the commodity basket? And then in the equity basket, which way can we actually play that? So we look at across our, all these strategies to see how the technical factors sort of line up with the fundamentals. But our investment thesis is always fundamental triggered. Technicals help us to time our bets, but the fundamentals are pretty much the main premise as to when we get long or short something. But I think the three-pronged approach, multi-analysis really, really helps us to really zero in on discrepancies and get in and out of the right time, because technicals do drive entry and exit positions. They can sort of help you get in and get out. I mean, we have this sort of saying on the trading floor, cheap can get cheaper, right? So you're long the equity, but you need a trigger. You need something to help it move from being undervalued to overvalued.
What would you say is something investors, and maybe you just said it, but what would you say is something investors can feel really good about with MBCC?
The way I think about investing my money is that if I want to make my 10% returns, if I think there's value in gold or equities or commodities, you really need to have a dynamic asset allocation mindset. And that's what we do at MBCC. Sometimes we don't invest in anything because if cash is worth, better, like today you have money markets giving you 5%, we put the money there because we don't have to always be invested. And something on the buy side and at UBS or places, we were always forced to be invested. And that's the biggest sort of problem with hedge funds, where they are forced to, they live off the fee, so they have to be invested, but then that also hurts them. MBCC will not be invested if there's no opportunity. For 2 or 3 months, we may not do anything, but obviously we wait for displacements and then we sort of monetize. So whether we make our money in 3 months or in 12 months, the main thing is to make the money in a risk intelligent way. And I think a lot of, like, for instance, our fees are quite competitive because the Ponzi scheme of charging higher fees is not what we do. We're here to make money for our clients. We're incentivized to make them money effectively, as opposed to just live off, fees on AUM. So I think that's something that's changing as well.
Yeah, I see that as well. So do take a look on the Carl platform. We are Invest with Carl, the Carl app on Apple and Android. Maleeha, any final words for our investors?
Anytime anyone has any questions, part of this process to educate and really be a part of this journey. So I encourage anyone to ask questions. I'm more than happy to answer them. The more you understand, the more you feel comfortable, and we want our clients to really be part of the process.
Sounds good. Maleeha, thank you so much for joining us today. Investors, thank you for another episode of Invest with Carl, and we will see you next time. Bye-bye now.
Thank you for listening to the Invest with Carl podcast. The views shared on this podcast do not necessarily reflect the views of Carl. This podcast is intended for informational purposes only and is not intended to constitute and should not be deemed to be an offer to sell or a solicitation of an offer to buy any security or investment, financial advisory, legal, tax, accounting, or other professional advice. Carl funds are currently available to accredited investors with a minimum investment of $20,000. To learn more about Carl and to download the Carl app, go to investwithcarl.com.